In this video, I'm going to explain the IRS Form W4. Now, I've done a ton of other video walkthroughs on the IRS Form W4, but what's different about this video is that I'm going to show you how you can control your taxes so you can decide if you want a bigger paycheck or a bigger tax refund. Now, I'm going to start by going through the paper version to the W4 just to explain it, and then we're going to go through an example of someone that's earning $100,000 so you can see exactly how to control your taxes. So let's go ahead and get into it. This is the IRS Form W4, and we're going to go ahead and fill it out with step 1, entering in your personal information. So you're going to go ahead and enter in your first name and middle initial, along with your last name, your social security number, your street, your city, state, and zip. And then in step 1C, you're going to go ahead and check off whichever filing status applies to you. Now, complete steps 2 through 4 only if they apply to you. Even though it says only complete steps 2 through 4 if it applies to you, we're going to go ahead and move forward with this because steps 3 and 4 are how you're going to control your taxes. Now, if we just go down here to step 2 with multiple jobs or spouse works, it does not matter if you're single, married, or head of household. We're going to go through this section because look what it says. Do only one of the following. A says use the estimator, the online estimator, which we're going to go through at the very end for the most accurate withholdings for this step. It's super important that you understand not to do any of these other steps and to use the online estimator. But we're going to continue on this page so you can see how to control your taxes. These next two sections for steps 3 and 4 are very important. And I wrote over here exactly what they do. Now this says claiming dependents. However, there could be an adjustment, and this is your tax credit, which I'm going to explain when we go through the example. Step 4 shows 3 different boxes. This is going to increase your income. This is going to decrease your income. These are deductions or adjustments to your deductions. And this last step, 4C, increases your withholdings. So basically, these 2 sections will either increase or decrease your tax credits, and these 2 middle sections will increase or decrease your tax deductions. So those are the 4 boxes that we're going to use to control our taxes. Now let's go through an example of someone earning $100,000 so you can see exactly how this is done. Here's someone earning $100,000 salary, and the first thing that we need to do to figure out their taxes is to subtract the standard deduction. And for 2022, for someone that's filing single, it's $12,950. That means we need to subtract that amount from the $100,000. So $100,000 minus $12,950 makes it $87,050 of taxable income. So the first $12,950, that standard deduction, is not taxed. The next $10,275 is taxed at 10%. So that's going to equal the $1,027.50. The next $31,500 is going to be at 12%, and that's going to be $3,780. And the remaining $45,275 is going to be taxed at 22%. That's $9,960.50. If we add all that up, that's going to be $14,768. That's a quick rundown of how taxes are calculated. Let's go back to the W4, to these 4 boxes, so I can explain how credits and deductions work and how they affect your taxes. Here's the same example of using $100,000 salary, and we're going to look at our credits versus our deductions. Now we're going to take our tax liability of $14,768 and rewrite it here. A tax credit reduces your tax liability dollar for dollar. So a tax credit of $2,000 will reduce this amount by exactly $2,000. And that's why we get $12,768. $14,768 minus our $2,000 credit, and we're going to end up with $12,768. This $2,000 is just an example. But if we use the same $2,000 for a deduction, your deduction reduces your taxable income. So that's the $87,050. That is our taxable income over here. If we have a $2,000 deduction, it will reduce our taxable income to $85,050, which we multiply our $2,000 by our 22% tax bracket, which was our highest tax bracket that we were in, and that is going to be $440. That means we're going to reduce our tax liability by only $440 down to $14,328. So you can see that a credit is more valuable dollar for dollar than a deduction. An example of a tax credit would be the child tax credit, which is $2,000. And an example of a tax deduction would be making a contribution to your retirement plan, to your traditional 401k, 403b, or traditional IRA. Now let's take a look at the IRS Form W4 on step 3. This step says it's claiming your dependents, but this is for all of your tax credits. And sections 3 and 4B will reduce your withholdings, while 4A and 4C will increase your withholdings. So I had to go through all this math so I can explain how your taxes work and how they're affected by your credits and your deductions, but there's a much faster way to figure all this stuff out. And that's using the IRS Tax Withholding Estimator. And I've already gone ahead and entered in all the information from our $100,000 example. So we can just jump to the results page. And if we scroll down, we can see the anticipated tax obligation is $14,774, which from our example is $6 different, and that's because the IRS uses rounding and tax tables to get their answers. But if we scroll down just a little bit more and slide this all the way to the left, because we don't want a refund in this example, and if I go here and click on the W4, it's going to be pre-filled, and we're going to see that they're going to add an additional tax withholding of $60. Now, I didn't enter in anything differently than what we did in our example, but if we go back to this section right here with income and withholdings, and we scroll down just a little bit, what the calculator is doing is it's saying, well, we're already withholding $1,000 here per pay period, and we've already withheld $5,000 year to date. The information in this section is coming from your last pay stub to show how much you've withheld already this year and on each paycheck. I'm going to come back to this section a few times throughout this video just to show you how the W4 works. But if you're using the online estimator, you're going to enter this in one time and not make any adjustments using this page. So just enter in what is on your pay stub, and that is it. This is just to explain how the W4 works. So if I go here and I actually drop this down to $2,500, we could see how that is going to affect our W4. And if I go to the end and scroll down again, we can see that we're going to need to withhold an additional $252. And if we can see right here, 4C, it says $252 because we need to withhold enough to meet the anticipated tax obligation. Now, if we do this one more time and I go back to the income and withholdings and we increase it significantly, say to $10,000, it's going to again adjust our W4. If we scroll down all the way to the left, click the plus, click the W4 again, it's actually going to put in a credit of $7,802. The reason I wanted to point this out is because this is how it's making the adjustments. Even though step 3 says claim dependents and we have no dependents in this example, it's still putting it in there. And that's because that is the credit section. In our example, with all those adjustments that we made, our anticipated tax obligation was exactly the same in every scenario. It's just a matter of whether or not you're going to pay it now through withholdings or pay at the end of the year. Your anticipated tax obligation does not change with the Form W4. But looking at the W4, if we increase the tax credits, that's going to give you a bigger paycheck. And if we increase the tax withholdings, that's going to give you a bigger refund. But again, it's not going to affect your anticipated tax obligation. It's just a matter of whether or not you're going to pay it now or later. But if you do want to make an adjustment to your W4 and have a bigger paycheck or get a bigger refund, then I would suggest going through the online estimator first as a starting point and then make the adjustments from there. And that is the IRS Form W4 Explained. If you've enjoyed this video, be sure to subscribe and we'll see you on the next one.